What is good, guys? It's Rey-Jay back with another video. And in this one, I want to break down what's going on with NIO stock and break down some other important aspects of the FOMC minutes. I'm going to talk about how this has affected the markets and how this may affect us as well moving forward, and some very important things about tomorrow as we have some interesting technicals developing on NIO. Now, before I break anything down about what's going on with NIO, Tesla SPY, and the QQQ, and a couple of tickers out there, let me just mention a couple of things before starting. I am firstly not a financial planner, so make sure you take none of this as financial advice. And also, if you guys can, please check out the Webull link, which is down below and in the description. If you sign up for Webull, the link down below, and deposit any amount of money into the account, you are guaranteed up to 12 free stocks. The offer ends very soon. It ends in just about 6 hours, so check it out before they run out. With that out of the way, let's get on with the video. NIO is down 3.63% for the day again, as the whole market ended up getting this rug pull to end the day. On top of this, NIO has another issue that has to do with the macroeconomic factors of China, as we're starting to see more and more negative effects affecting the entire economy there. Now, with the banking issues emerging over there, and not to mention other concerns about recessionary fears, the lack of demand, and factors like that, we're starting to see a lot of Chinese tickers taking some hits. And looking at NIO, the overall price action is still suggesting that the share price is quite weak. We're trying to hold support at $11, but if it breaks, we have the next imbalance below in the mid 10s that could be tested. We have to watch it very carefully to see if we end up continuing to break. Now, as of right now, although it looks more bearish, I want to talk about the FOMC minutes, how this is affecting the whole market and NIO. Then I'm going to talk about other important factors. But right now, as the minutes came out, the Fed officials are seeing another risk of inflation going up again, and they're leaning in the direction of more rate hikes. This is what the majority of them ended up saying. And they're talking about this because of the fact that core CPI or core PPI, and not to mention PCE, which is core, they all have a tendency of being relatively high. Now, looking at the current data, I mean, it's quite clear that gas prices are starting to go up, and energy going up has a big effect on other sectors. With all of this going on and the Fed inciting fear into the markets like this led to a sell off near the end of the day today. But remember, these sell-offs are not always that like natural. They're not always like guaranteed to continue for many days in a row, because what sometimes happens is the market sells off after a big event like this out of the initial fear, then it starts to like curl back up the next day. Or it could just continue to sink lower if there's like more negative news the next day about this, if there's more fear being incited by the media, and etc. So it all depends on the real reaction, which could actually happen after the next day. And for now, we're going to be watching how does the market respond to this? Does the market start pricing in another rate hike in September, or are they going to continue to just wait it out? So we're just going to have to wait and see starting tomorrow. One thing that's a little bit different is the fear and greed index went from being very greedy to neutral, and it's becoming more fearful as the days go on. And it used to be, a lot more greedy before. Market momentum was becoming less greedy. Same thing with the current stock price index is dropping from extremely greedy to just greedy and becoming more neutral. And then on top of this, the McCullen volume summation index is becoming way less greedy than before, seeing this continuing to drop. And finally, the put and call options are becoming more fearful in terms of their positioning. The market is becoming less and less bullish and becoming a lot more fearful. The VIX, or the market volatility, is still showing the same thing. It's holding above its 50, and it's continuing to hold up nicely as extreme fear is once again emerging. So this is once again not the best of signs for the market, as the market was very greedy for a very, very long time. And a pullback like this is long overdue. But the question is, how will the market respond tomorrow, right? What could end up affecting it? For earnings, we don't have anything too big. We have Walmart and then a couple of others like Dole announcing earnings. Walmart's going to be a big one. We're going to find out what happens with their guidance, because Target had its guidance actually cut today, despite the fact that they actually beat on earnings. So that's going to be very interesting. We're going to wait for Walmart's tomorrow morning, and that's basically it for like the majority of the week. We have Ross after the market closes on Thursday, and that's about it for retail. For data, there's nothing really too big coming out except for like initial jobless claims. So lots of jobs numbers are coming out for tomorrow. We're going to find out what this looks like. This will have a big effect on the market tomorrow morning. And if this is way too hot, the market would actually like that, as the Fed is going to be de-incentivized to be hawkish. If this is very, very low, the market may not actually like that. We have to be very careful here, because the Fed is talking about how the current employment numbers are too hot and they are leading to a risk of high inflation. Now, in my opinion, you can't solely just look at unemployment or spending. There are many other factors that will dictate inflation, such as supply chains, not to mention how other countries and their central banks are performing, not to mention our current changes to monetary policy. All these things are going to play a big role too. Could you argue that the jobs numbers play a role? I mean, yes, but that's not the biggest factor. It's not the only factor, in my opinion. And I think that the Fed is not just after inflation at this point, but they're also after a reset. That's going to be very important for businesses. I think that's what the Fed is also after. So we're going to be watching these things very carefully going into tomorrow. NIO's volume is dropping, so we're actually not selling off as aggressively, which is a decent sign that NIO is getting closer to support. 59 million was the volume. And then looking at the overall data, we're seeing the short volume still dropping, so it's not that bad. The price per ratio is dropping. NIO is losing relative strength. I didn't see any big pieces of news coming out for it, by the way. But the current news involving China cutting rates and the economic hardships for the banking sectors, the fear of contagion, not to mention the lack of demand over there and them not really meeting all expectations in terms of their overall imports and exports data, that's all leading the direction of downside for the Chinese sector, downside for many Chinese stocks, and that's part of why NIO has been dropping. NIO is not doing anything wrong fundamentally. NIO is not like doing horrible. NIO is not announcing bad numbers right now. It is dropping because of the market and also because of news involving China. That is like an external factor that's outside of NIO's control. It's not NIO's fault, and there's going to be a very nice recovery eventually. But I just want to make it clear that when this happens to any company, if this happened to like the USA, these things happen to the US, Tesla would also be sinking. Tesla's already sinking, but Tesla has not announced anything too bad. It's just that the whole market moves on a similar algorithm, and we have external factors affecting these stocks. On Thursdays, NIO's only green about 40, excuse me, sorry, it's about 50.68% of the time, almost 50-50, so nothing too crazy. I also want to add that we tend to see more volatility during the fifth and also during the seventh hour of the trading day. And finally, the short interest is starting to go up. We saw about 14.5 million NIO shares being shorted just a couple of days ago. We'll see how this affects NIO as we're seeing more shorting, at least as of recent. So looking at the chart, it's continuing to downtrend. It hasn't really based just yet, but I just want to mention that the 4 hour is also looking bearish. It's also still looking kind of weak. And it looks like this thing is getting very close to this imbalance down here and wants to base around here. So I'm going to be looking for a pop tomorrow morning, and then I think it's going to come down to about 10.6 to 10.7, this imbalance down here, then make an attempt to bounce and close a little bit in the red. I'm still leaning a little bit more in that direction for NIO. And I still think that the overall Chinese sentiment and the news affecting China is having a big effect on the company. Now, looking at SPY, however, things are looking a little bit different. SPY came down pretty hard after the news came out that the Fed is still open to raising rates. And from a technical standpoint, it does look a little bit more bearish, but I'm not going to solely depend on technicals because we have to watch for levels. What do I mean by that? Well, the market got an initial sell-off from the initial reaction after the FOMC minutes. Okay, that does not mean we have to keep selling tomorrow and for Friday. That's not a guarantee because sometimes there's trickery. Sometimes unexpected moves could come. Sometimes the market could feel like it dropped too much. There's too much selling, and the market makers could try to cause the opposite to happen. So for tomorrow, if we see SPY hold above 440, if that actually ends up holding, there is potential for it to make its way back up to 442 plus or even higher levels to 444. If it fails to hold 440 during our retest, okay, because I think it's going to retest this. If it gets a rejection, it comes down to 439.39, test the low right here. If that breaks and there's bad news that comes out that causes the market to break, then I see this thing coming down to 437, then we will see more downside. We have to watch for confirmation tomorrow morning just to be safe, because with these FOMC events, sometimes the first move is not the real move. You have to be very, very careful. For Tesla, it's going to translate very similar to SPY. If we get a bounce tomorrow, right, you're going to be watching to see this test of about 230. If Tesla can get it back above 225 and then push up for about 230 and hold above 230, it does have potential to hold up quite nicely. It could make an attempt to hold 230, but if it hits 230, rejects, and ends up failing, then Tesla could start sinking a lot lower, and we could see Tesla come all the way down to 221. And if that fails us, there's like 270 to 215. Tesla will see more downside if it ends up breaking and failing to hold 230, and if it breaks below 225 again. So 225 is also going to be important. If it ends up, failing, like let's just say it tests like 230, then rejects, 225 is going to be key. If that fails us, if it keeps failing to hold 225, it is going to sink all the way down to like the very low 220s, in my opinion. It's going to look weak. So watch for that test tomorrow. That does seem more probable, but just to be safe, we have to watch for confirmation. Last but not least, for the triple Q, before I talk about NIO, watch for retest of 364. If it could hold above 364, we could see this thing push up for about 366, but 364 is going to be key. If 364 rejects, if it fails to hold and it starts coming down and breaks this low at 362, it's going to sink all the way down to 360. And if that fails, this 357 is on the table for this distributive structure to play out. Okay, so we're going to be watching for the test. I'm not 100% sure which way it's gonna go for now. We just have to wait and see tomorrow for the reaction after the FOMC minutes. The initial reaction has been bearish, but we'll see if the market tries to base or balance, or if we try to get an opposite reaction tomorrow, because sometimes that happens. Sometimes the market is tricky, so you have to be open-minded. So I hope this is as clear as possible. For NIO, we're going to be watching tomorrow, kind of like a bounce in the morning, then a retest of like 11.5 or so, then rejection. I think it's going to come down to 10.7 to 10.6. That's where we have this imbalance down here. It may be acting as a magnet for NIO, dragging it down before NIO makes an attempt to bounce and then end up closing a little bit in the red. I could still see a red close, a very, very small bounce could come at the end of the day, but still a red close around 11 flats. And I think that's where NIO is going to try to base very, very soon. So that's where I'm leaning towards from a technical standpoint. But just to be safe, if NIO breaks this low, if it breaks below 11.8, it's going to most likely come down to 10.7. If it manages to hold above 11 and starts pushing back up, if it holds above like 11.4 or so, we could see this thing retest like 11.8 in the future. But like I said before, I'm not leaning in that direction. The trend looks more bearish from a technical standpoint. And because of all this negative news involving China, the odds do favor it. Maybe a little pop, then a drop, and then another red close for NIO for tomorrow. That's more probable based off technical analysis and the negative news. It's not NIO's fault, but it is what it is. The best thing we can do is be unbiased. All right. So thank you for listening. Please don't forget about the Weeble link. The offer ends in just a couple of hours. Do what you have to do, and I'll see you guys in the next one. Thank you. NIO to the moon, as the long term is still very bright, and peace out.